Hey everyone, I'm Charting Man Dan with the Chart Guys, trader and technical analyst for the last 14 years. We're going to check in on the market after a big drop down most of the week. Bulls did put up a fight to close on Friday. We'll see where we stand, bigger picture on weekly charts. We'll go over some Tesla trade review as that's what I was focused on the entire week. Let's get to the charts. All right, so we're going to start with the major indices, the major sectors. We'll look at some individual names, then commodities, and then we'll wrap it up with Tesla and some trade review. So in the last week's video, I said this was bears playing some convincing defense. Can they go on offense? And they definitely went on offense to start the week with a big drop down, and bulls played defense of support on the S&P 500 to end the week. So here is the S&P 500 futures. Let's actually use ES. So ES, we have the lows from back in November and January that are currently holding. And what has shifted for me is enough to just pause the brakes and take a little bit of a step back, because the way that I've been operating is ever since, I view the market in periods. You can be very zoomed out and say post 2008 is a market period. You could zoom in a bit more and say post CVID dump is a shorter term, few year period. For me, this is a 6-month period. Why? Because the price action was doing the same thing. We had the August sucker punch flush, and from that point forward, we set a weekly high or low with every period of consolidation. So I was buying dips, I was looking long, I was playing weekly uptrends, and the weekly high or lows were remaining intact for a significant period of time. We have now more convincingly lost those weekly high or lows. Again, we are still in what would be referred to as balance on the S&P 500 because some of the other sectors are holding up really well. Big tech and semiconductors were most of the weakness this past week, as we'll see when we zoom in a little bit more. We're starting from a zoomed out perspective, but we're playing defense. But again, I'm just pumping the brakes and shifting a little bit, because the number one way that traders lose money is by trading the same way through a shifting market environment. And so the market environment shifted enough for me to just pause and be patient and just wait for more information, essentially. And that doesn't mean I'm not going to be trading. I'm going to be focused on day trades and some individual things like Tesla. But it just means overall bigger picture, less confident than the last 6 months. Same thing with the NASDAQ. From this weekly higher low forward, it was just a series of these little higher lows that did break. I mean, technically the NASDAQ futures chart here hit the lowest level that we've seen in the last 3+ months. So again, we could say it's different than the last 3+ months. That said, it's a lack of acceptance right now at that new low, because we closed, you can see a lower wick, we closed above this support zone. So essentially bears played defense, then went on a little bit of offense, and now it's the bulls' turn. I just imagine, again, the trenches, World War I, bulls and bears in uniforms. And the bears were in the trench, the bulls were charging forward, the bears pushed the bulls back for a while, for a few days, and now it's the bulls defending their dug-in trenches, and they're battling for this middle ground that, again, the bears are knocking on the door. But in the S&P 500, we're right back in the middle. We're right in the middle of this range. So that's where we stand, bigger picture. Now, zoomed in a little bit more, the semiconductors, same deal. We broke and hit the lowest levels in 5 months. That's significant. We have been sideways in this base for a prolonged period of time. That said, we closed right on that support. And you look at the daily chart, and you can see, again, this base held it, and now on the weekly, again, we dipped below it, we closed right on it. But the only hope for the bulls in the short term that they're about to take over here would be if this is a megaphone in the semiconductors. If we had, let's go to the weekly, if we had something like this shape up, and again, we had the bull break with no follow through. So now do we get a bear break with no follow through? I don't have a lot of conviction in that pattern, but it is something that I'm watching for. And of course, NVDA is stronger. Can NVDA form a weekly higher low here? If it can, essentially, if NVDA doesn't break this low of 113, then we know the semiconductors are not likely to follow through under that support. So here's NVDA. It's going to try and form a higher low and tighten up within this wide range. Earnings reaction was initially bullish, huge sell-off on that day. That's a very convincing candle, fairly similar back here. But again, bulls attempting to defend support. So we can condense it to the 2-day time frame if we want. Do we just form a 2-day tightening range? So what NVDA does is going to have significant impact on whether or not I believe that SMH bear break can have any follow through. And some of these other semiconductors like AMD has just been trashed. I mean, look at that downtrend on the 2-day time frame. That's just so consistent. Another name that's had a consistent downtrend like that, ANF. Just look at these daily bear flags. It's just systematic bear flag, bear flag, bear flag, bear flag. And we'll see what earnings does. But AMD, very similar, just complete control with bear flags. MU is still range bound, trying to defend its support zone. But again, for me, it's just because I'm watching so many things, it's just NVDA and SMH is all I'm watching at the moment. Financial sector, extremely impressive Friday afternoon. Look at the weekly chart. I mean, this is a bull flag at all-time highs. And look at this recovery. We went straight up 2%. You know, we were weak, and I was Friday afternoon, right at the start, I was, are we about to roll over again? And the NASDAQ bulls held the low of the day and recovered into the hourly trend change. And then XLF shot straight up 2% right to the all-time high. And so now this all-time high is a triple top, but here we are knocking on the door. Again, look at this support zone. And now we've got this key resistance zone. But if XLF gets back to all-time highs, the S&P 500 bulls, you know, can breathe a little bit of a sigh of relief. That is showing us the second most important sector in the markets. As far as I'm concerned. Again, I view semiconductors and big tech as sort of the same thing. I know they're different, but the second most important in terms of S&P 500 holdings in a sector, XLF. If it gets that break, it gives the bulls more confidence, essentially. You know, the way I view it is almost I'm more confident buying dips in tech and semiconductors if the other major sectors are still showing us strength. And XLV, same deal. XLV confirmed this inverse head and shoulders that we were looking for on the weekly. And it's hitting the highest levels in 2.5 months. So there is definitely rotation going on. Some of the big tech names, some of the semiconductors are hitting the lowest levels in 3 to 5 months. Here's healthcare going in the other direction. And just for continuity's sake, to show you how I analyze things, you know, remember the video 2 months ago where I did the long-term patterns video and I said, I'm watching for the possibility of yearly consolidation in the healthcare sector. If we're going to see any weakness in the market, I do believe yearly consolidation will happen. Right now, it's an inside bar and we're a bit comfortable, but I can essentially say, okay, if we're going to see weakness in healthcare, it would be a monthly head and shoulders. If the broader market is going to see any meaningful weakness, that would need to happen. And if this is going to be a monthly head and shoulders, we need to top out, you know, sometime in the next month probably. So again, do I have high conviction in this pattern? No, not at the moment. But I'm watching it and things will change. I'll get more information every single day, every single week that will shift the probabilities as to whether or not this is a head and shoulders pattern. So I'm not going to be constantly trying to go short this sector at this point. I would probably need a setup where I say that's either the monthly low or high or I'm wrong and play off of that if I am going to take a short. But again, you know, that's it on the monthly. Now we zoom on the weekly. And so what does that mean? This is a key level. We're not going to form a monthly head and shoulders if that weekly bull flag high or low holds. So now 143.84 is the most important support to me. If that breaks, the probabilities it's a monthly head and shoulders would uptick fairly significantly. If that level does not break, it's not going to uptick at all. So that's what I'm watching in healthcare. And UNH being a big name, no, it's actually LLY. LLY being a big name in the sector, the monthly is trying to confirm a bull flag back to all-time highs. So that's something I'm going to watch closely as well. On sectors that I'm not narrowly focused on, I like to look at the ETF and then 1 or 2 major names because, again, I can't have overload where I'm looking at 5 stocks from every single sector. That's too much. IWM, as I mentioned, I haven't cared about IWM in a while unless you're bearish and trading actively bearish, which it's a lead bear, so you're definitely focused on it. I am not at this point. Again, same deal. We broke support and we closed above it, but fairly significant weakness, lowest price we've seen in the last 4.5 months. Monthly is testing EMA 12. We closed right on it. So again, same thing. All right, monthly EMA 12 has been support for an entire year plus. And I'm not saying we've lost it yet, but we'll see in March if we do. So again, if we can say something has been the case for this period of time, and then it is no longer the case, we know something is different. We always want to recognize those shifts in market environment for the reason I stated at the beginning of this video. One more thing I want to point at, going back to the NASDAQ, people making comparisons to the 2022 top, and that's a valid comparison. You know, how we topped out here, it was just absolute euphoria, complete bull control, all-time highs, very healthy consolidation, sideways, potential bull flag, chopping around, and then we rolled over. And then we confirmed a weekly downtrend. So the most important next big check mark for, well, there's two. For bears, the NASDAQ daily chart is essentially a stair-step drop here from the highs. And so we haven't really officially confirmed a daily downtrend. So that still has to happen. But the big one for me is the weekly downtrend confirming. If we confirm a clear weekly downtrend, that will tell me something is significantly shifting. And that was a red flag back here as well. You know, we were already a good ways off of the top, but by the time the weekly downtrend confirms, you know, that told us, okay, things have shifted significantly, and then we get a bear market for the next, 10 months or whatever. So that's the big check mark for bears. Can you confirm a weekly downtrend? And again, this is fairly similar to back here, which is why I'm definitely paying attention in this, potential distribution phase up at a local high. All right, some individual names now. PLTR. So that's a big bearish reversal candle on the monthly chart. Volume climax, RSI through the roof in blue sky breakout. But okay, so I say there's profit taking. I have to zoom in, give me more details. Weekly, well, a weekly higher low is the most likely scenario. So these two candles tell me two completely different things. If you give me this chart and you don't tell me anything about time frame or even just the one candle, I'd say, yeah, look for further pullback. But if you show me the weekly chart, I'm looking for a higher low. And, if we're going to get further pullback on the monthly, we likely need to confirm a weekly downtrend for that follow through. And so that's just a little nuance of how you always got to zoom in for more details. And, my first year or two, candlestick shapes in trading meant a lot to me. A bearish reversal candle at the top of an uptrend. And then I realized you get so much more information when you zoom in. You can have a bearish reversal candle on a daily candle, and the hourly chart can be in an uptrend or in an hourly downtrend. And you get the same daily candle shape with those two completely different hourly scenarios. And you have to zoom in to get that additional information. And so PLTR, I would be looking for a weekly higher low compared to 63.40. And then I would look for a weekly lower high. Again, we know when we get this kind of volatility in both directions, we scout equilibriums as the most likely scenario, which Quantum is doing. We'll talk about that in just a moment. So a little bounce attempt on Friday, big gap down, a lot of work to do. Technically confirmed an hourly uptrend right into the close, but need follow through. Maybe we get a setup for a little inverse head and shoulders attempt. But again, if you're looking on the weekly, you're scouting that high or low. If you're bearish, you're either aggressively scouting a daily lower high or you're patiently scouting a weekly lower high. Aggressive or conservative is a question you need to always be asking yourself as a trader because it determines what time frame you're going to focus on a trade. Whether you're going to be zoomed in on the hourly or the daily, or you're going to be zoomed out on the weekly or the monthly in terms of how patient or conservative you want to be. And again, market environment dictates whether I want to be conservative or aggressive. A lot of things do, but that's one of the major factors. So quantum names. So RGTI, still watching this weekly high or low. Unfortunately, earnings are this coming week. I'd be starting to look to position, and I actually made an attempt. Back here, I think it was, I entered a long, I sell partial, I stop out my runner. Made an attempt, didn't lose anything. Okay, back to the sideline, back to patient. I would attempt again, but not with earnings this close. And earnings are going to essentially dictate whether we head down to 595 support or set a weekly high or low. So I can potentially we'll see how it shapes up, but may just default and say, all right, I'm just going to watch this weekly equilibrium and play it when it breaks sometime in, April or May or June or whenever it is. And so far the quantum names are doing exactly what was anticipated because again, if I would say that I am a I'm a euphoria expert in trading just because that's where all my experience is focused. And this is how euphoria tops. And QUBT is back to fresh consolidation lows, again, giving back the vast majority of the move. And as I said in the top video, some of these names are never going to see these levels again. And I'm not going to pick and choose which ones. I guessed it would be QCMO. Nope. I always get it confused with that one. QMCO. Again, fresh lows, we need 750% to get back to where we came from. That is not happening, 700%. That is not happening anytime soon, if ever. This is your standard. How could we have known? Aside from experience, look at QUBT. It gave the exact same playbook time and time again. This is so close to what we just did. Even in the price levels, I mean, we started from lower, we didn't get quite as high, but we shoot up, we pull back, we lower high and lower low, shoot up, pull back, lower high, lower low. There is nothing different about these two charts at this point. We'll see what earnings does. You know, I would look for some of these names to give us monthly higher lows. IONQ, fresh consolidation lows on earnings. A monthly higher low is the most likely scenario. But again, this is why it is so much better to be scaling out into euphoria, knowing you're not going to nail the top, but knowing that 1,000% moves are not sustainable, 1,000% plus in a couple of months, and you will be able to reload cheaper 99% of the time. All right, let's go quantum. Quantum. No, we did. Let's go commodities. Dollar. So last week talked about it. Looks like we're shaping up a potential falling wedge. Falling wedge breaks bull. Now what? Well, now weekly bounce underway. We are in a weekly downtrend, lower high, lower low. We could say anything under 109.88 is just a lower high again. But we know bigger picture, a monthly higher low is the most likely scenario. This is why trading is so hard for newer people. And the example on PLTR is a great one. You are looking for two different things on different time frames. I'm looking for a weekly lower high and a monthly higher low. How do I balance those two things out in terms of focus? Well, you have to get really good. Sorry if I keep leaning away from my mic. You have to get really good at the time frame relationship and how the trends on one time frame impact the trends on another time frame. That's why I'd say that's the second most important thing in technical analysis behind identifying price level trends is, okay, price level trends, how does they relate to each other on these different time frames? And so that's why we're constantly cycling through time frames. If you ask me to do analysis on a chart, I'm going monthly, weekly, daily, hourly, zooming out and then zooming in. So I have the complete perspective, and I know the most likely scenario, potentially depends on the setup. I know the most likely scenario on the shorter term time frame, what's likely to happen first, and then I know the most likely scenario on the longer term time frame, what's eventually to happen, likely to happen later on down the line. And so, you know, we can be watching for a potential reversal pattern on the weekly chart to try and shape up to set that monthly high or low. But for now, the weekly downtrend is going to be our guide. You know, if we get a big enough weekly bounce, then we'll watch some kind of inverse head and shoulders type of reversal for the monthly high or low. If we get a lower high and a lower low with no follow through, we'll start watching a falling wedge on the weekly time frame for a monthly high or low. Metals, gold started weekly consolidation. This was inevitable, stair step, 7 weeks in a row or whatever it was. We're going to look for a weekly high or low. We're going to back test previous all-time high. Ideal, if bulls can hold that, it'll remain a bull flag. If so, silver's still clearly weaker. Again, what I'm cautious of on silver is a monthly head and shoulders, and that is shaping up. I mean, if we break 30.68, our monthly lower high is set, and we're now looking back down at 28.74. And I still have a runner swing position from a long time ago, and my stop's under there, but I do not like that monthly candle. And let's zoom in, weekly. So again, same thing, a weekly high or low, you can be watching for it, but you just got to be cautious of that monthly as well. So burning on bulls, we haven't even seen a bounce in a while. Daily stair step, 6 days in a row. I just don't love this positioning. And we'll see how it shapes up. If we confirm that monthly head and shoulders, we can zoom out. We'll look for a 3-month high or low and back test. I mean, we might drop back to 26 zone. But first things first, can bears set that monthly lower high with a break of that level, whatever it was, 30.68. I was keeping an eye on the miners, and I still might. Again, the miners may just be a monthly lower high, and now we're about to tighten up in an equilibrium here for a couple of months. I was watching for the possibility of a weekly cup and handle type of setup. Now, I didn't think it was the most likely scenario. I just knew it was a possible scenario. So I'm not entering into weakness and then hoping it's a bull flag. I'm watching and identifying. I have to find a level where I say, okay, that's either the weekly high or low, or I'm wrong. And that's this low right now. I don't have a position. 38.58 is that low. If 38.58 holds, this is a weekly bull flag with the cup and handle type of setup. If that level breaks, for me, the cup and handle is out the window, and it's more likely a monthly equilibrium. It could go either way. Obviously, gold Silver would need to recover. Gold would need to be back at all-time highs. If GDX is going to break out here, the broader market would need to be recovering. So there's a lot of things that need to align, which is why I don't have high conviction this is a weekly cup and handle. I didn't like the fact that gold was a 7-week stair step. Miners had already started consolidating. Well, we know gold weekly consolidation is inevitable here. So again, this is just a setup that I'm watching and may make an attempt at. Well, no, I'm going to be traveling next week, so I'm not going to make an attempt. But that's what my mindset would be and how to approach it. If I don't have high conviction, I'm not going to be entering assuming that something's going to happen. I need a level nearby to make the risk reward worth it. Oil's trying to set this weekly higher low still. Again, an equilibrium is the most likely scenario. Breakout, 50% plus retracement. We're going to scout a higher low, then a lower high, tighten up, and then volatility will likely return middle of the year again when this tightening range breaks, but still no weekly higher low set yet. Still in an energy runner. This equilibrium is going to break within the next 3 weeks, I'd say. And I would love, energy bulls, XLE, are positioned well for oil to set a weekly higher low. Why? So here is energy essentially at the close of last week. Where was oil compared to the close of last week? It's fairly close. At close 74, but it's 1% lower, 1% plus, right around 1%. So I'd like to see oil get the weekly bounce going, and obviously I want to see XLE break this tightening range bull. It's just sideways chop. We know volatility is coming here in energy because we have just been sideways chopping around for a year. Look at this range. Yeah, a year. When's the last time we've been in this tight of a range, percentage-wise? This is something that I often do when I see a tight range. I want to know, is this the tightest range in many years? And so we can say we've been trading in a 19% range for a year or so. This is fairly similar back here. We didn't get a huge breakout when it broke, but overall, we don't generally stay that tight for that long. Here was an example where we were fairly tight for 3/4 of a year and got significant volatility. My point is, I expect energy sector volatility to pick up a good bit second half of this year. And I have a long position where if it's a bull break, I will benefit, and if it's a bear break, I won't lose anything. Again, so much of trading is I don't know, but I'm going to position myself in low risk, high reward by doing some maneuvering and selling some partial positions. So if one outcome, if fork in the road, if one outcome happens, I benefit and make money. If the other outcome happens, I don't benefit and I don't lose money. Sounds so easy when you break it down. That's all trading is. But obviously it's the positioning and knowing most likely scenarios that is the hard part. All right, so now let's go a little bit of, first we'll do Tesla analysis, and then I'll show how I traded it this week because I had a real good week on Tesla in both directions. But here we are in the monthly. We closed right at monthly EMA 12, and this is a back test of this previous resistance zone trying to act as support. So we rejected here on the initial all-time high run-up, and then we tried to hold it, reject, 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 breakout, back test. And so this was one of the levels that people were watching. Once we break 300, we're looking to the 270s as a potential zone because of all the price action that took place there while we were chopping around sideways before this breakout took place. Remember our 3-month equilibrium that was just tightening up? This was a major level in that 3-month equilibrium as it was tightening. So I'm looking for a Tesla monthly high or low, and I made an attempt. Some things that I'm watching for. I want a gap down open. Whenever I'm looking for an extreme top or bottom, they are often marked by gaps. Some of the more extreme ones have multiple gaps before, MSTR top. There were multiple gaps. There was one gap. It looks like it might be it. Not yet. Second gap. All right, it's it in terms of the top. So I like to see, when I see a test these daily candles like this and I say, wow, we're rolling over hard and it's complete bear control and we haven't gapped down once. To me, it almost is intentional. The market makers, and again, this is maybe completely fabricated, but it feels to me like it's intentional to not gap it down to get further bang for your buck and more downside. And then when that gap happens, that's almost like a signal to everybody in terms of, all right, there's our temporary exhaustion pivot to look for a reversal. And this was a tiny gap down, but again, it was the first gap down in what, a 30% drop from the daily lower high? 25% drop. First gap down. So that's going to get my attention. And again, I tried multiple times. Well, let's do analysis first, and then I'll break down. So we knew the daily lower high was the most likely scenario. I attempted a swing trade position from here on this bounce, and I got a great position, and I took a little profit, and my break even's down at 315. And then I even shorted this lower high, and I wrote a short down a little bit in a different account. And I'll talk about this with my trading, but that psychologically helps me when I break things up into two accounts. But didn't ride the short the whole way down. Took that off and then stopped out my swing attempt. And so now I'm all cash. I didn't lose anything on the swing attempt. Had a great entry. Didn't play out. So it goes. And you'll remember when I talked about that, fully expected another leg down was on the table. I accepted that was potentially even likely. But now I'm doing the same thing. Try again. All right. I went back to all cash. I didn't take a big loss. I didn't take any loss. And that gives me the green light. Yep. Try again. Absolutely. And so now I've done the same thing where I have positioned. We'll talk about it in just a moment, but positioned in the 270s, take some off in the 280s, take some off in the 290s. I mean, my break even now at this point is down probably 260 or so. So again, I'm just back. My day trading sizes are larger. I size down into a swing position because the overnight gaps and things give me less control, but I'm back in the driver's seat trying to let a longer term bounce play out. It's still a daily stair step. There's a wall of resistance we're going to look at here, but it's another attempt, and we'll see how it plays out. And the gap was the signal. And again, there's so many things I want to say. So I attempted multiple bounces on the way down. I shorted. There were some nice shorts this week where we had the higher pre-market reject the price. So on this day, I got a fill in the 308. Here was an example where you want to use psychological levels. This is one of the points in the entries and exits beginner course. You use psychological levels for support and resistance. Why? Because I said so. So here's the high pre-market, 310.18. I'm shorting off that level. And I make an entry on my short in the 308s. The high of the day at that point is 308.75. Now I could put my stop at 308.76. Just over that level, but what's 24 cents? Why not use 309? I stuck my stop on my short at 309.01. I missed stopping out by 1 penny, and that was the difference in $3,000 when the bears rolled over and that short position got to play out. 1 penny was the difference in thousands of dollars. And I just can't say why do psychological numbers congregate orders? Human psychology, a nice round number. Market makers or whoever, retail, just pile on these psychological numbers. And so if I want, to try and use that to my advantage, I want to go behind them. Just imagine a group of people and, there's a battle raging. I'm going to go behind the group of people to be protected. Or what if, I want to get filled? I'm going in front of the group of people. If I want to fill a short, I'm going 308.99. So I suggest, if there's a psychological level right near a price level that was a pivot, just give a little bit of wiggle room and use that psychological level. Anyways, that was a nice short. Then another day I was trying bounces. Definitely try to bounce on this day. And again, same thing. There's plenty of volatility to position in here. You got a 5-minute stair step. That breaks and we go 3%. So, okay, if I sell partial after a 1% bounce, try and let it play out. Nope, bulls don't do anything. All right, I'm out my long. And because I kept cutting my long and selling partials, I was in control of every single bounce attempt this week. And I don't think I had, I probably had some little losses on the attempts, but for the most part, I was winning on failed bounce attempts because I was selling partial. Now I look at the day where the bounce actually played out, and it would be so easy for me to, get down on myself and say, I should have let the whole position ride longer. I knew a bigger picture bounce was going to play out. But I can't fall into that fallacy because I have to remind myself the reason I've been so protected and green the prior bounce attempts that failed the past 2 days is because I traded this way. And so now when the real bounce gets going, I have less of a position size because I was scaling out. I entered 374s and scaled out a little bit 376 and then re-entered 374 and then I sell some 381 and then, I sell some 386. And then I get down to a swing position size and let it play out. And that's just letting you know some of the things that go through my head psychologically. Like, oh, coulda, woulda, shoulda had this much. Nope. Because if I did that same thing, coulda, woulda, shoulda, 2 days ago, it would have been a solid red day. So anyways, the trade setup for me was talking for days about looking for that gap. Give me that gap down so I can go more aggressive. So these were people were asking me questions about the Tesla play because it was clearly my focus. I am playing the massive volatility both ways intraday. I am hoping for a gap down to make a more meaningful bottom, which we have not had this entire leg down. I play day trade bounces. I sell partial. I stick a stop under the low. I need QQQ to give me a reason to hold long overnight though. So QQQ closing at the high of the day, confirming an hourly uptrend on Friday is enough for me to hold my Tesla remaining swing position overnight Friday into Monday. And I also have a solid profit cushion to try and let it play out for a bigger picture daily bounce. And then so first thing, so here's a little nuance. Tesla, no new low with QQQ. I'm in 935. What am I talking about? Look on the 1 minute time frame. And so again, we gap down. I know I'm looking for an entry this morning pretty quickly. So I'm on the 1 minute chart. Bell rings, NASDAQ drops. Tesla drops. Here we go again. Bears in full control. All right, I don't want to jump in right away. I want to at least see some kind of bounce attempt. So let's go side by side. Bear with me real quick. QQQ 1 minute. Tesla 1 minute. Oh, come on. Don't mess with me. Okay. So QQQ. Bell rings. We drop. Red candle. 2 red candles. 3 red candles. Stair step. Stair step. So here, 3 candles in. We're at the low. Tesla. 3 candles in. We're at the low. 1, 2, 3. That's the low of the day for Tesla. QQQ hits another lower low, no follow through, and a new lower low. 2 candles in a row, a new low of day. Tesla does not follow. So that's what I mean at 9:35. I get two 1 minute candles that tell me Tesla, no new low with QQQ. I'm giving it a shot. I'm seeing a tiny sliver of relative strength. And so I jump in and we then 1 minute stair step to a new high of the day. Great. I'm now comfortable. I've sold, if I'm in a solid day trade position because I'm a little more aggressive because it's a gap down and I sell, half, a quarter at 277, a quarter at 281, whatever it is. Now my break even's under the low of the day and I'm just in the driver's seat. Let it play out. And so I did, and I actually then grabbed a short. And so this has to do with psychology where why wouldn't I just sell my long, grab a short, and then eventually reload my long? I struggle to do all of that. It's so much easier for me to position for a bull trade, get my risk free, let it play out, and then I go into my bear mindset in another account. So I let my long play out, but we just shot straight up $20 to a clear resistance zone. Why is it a clear resistance zone? Because it was the most important level on Thursday. And this zone of resistance, we bounced, we reject from 293s, we pull back, we reject from 292s, we pull back, we reject from 292s as we're forming an equilibrium, 291s. It's an equilibrium. How this breaks is going to determine, again, I'm in a long here, breaks bear. Nope, it's not today. If that breaks bull, I hold my swing, the bounce gets going. But that is where bears defended very clearly. So if we're going to shoot straight up $20 right to that resistance zone, normally I'd be selling my longs in a day trade, but I want to hold it for a swing trade. So in my other account, my day trading account, I grab a short at whatever it was, 291. And I just stick my stop 293.61 or something like that. And it's insurance. Okay, if I stop out this short, I'm going to give up some of my profit from my long position, but it's essentially insurance where if we reject, I'm going to profit in my short on the way down. And so we reject, battle, reject a second time, roll over. I take a little bit of profit on the initial rejections. So now I'm in a risk-free long in one account and a risk-free short in the other account. Talk about a happy Friday. I don't have to do anything from here. I leave my stops in place. It's essentially a bracket order. And I exit into the close when I see bulls performing. And so I lose nothing on the short, and my long now gets to keep playing out. And so that's something that I've been doing a bit more, and it's newer with my trading style. And I really like it, and I am going to keep doing it. But it's only when I have I had a very high conviction short here just because Tesla 5-minute RSI getting overbought in a downtrend on a lot of time frames, right into resistance, right after bouncing straight up 6% or whatever it was, 7%. We haven't confirmed an hourly uptrend yet. I know hourly consolidation is inevitable, which we eventually got. But it's essentially just a version of my hedging game where I've got my SPY that I've been holding for 4+ years that I'm not touching in any weakness. But if I see the broader market topping out, I'm going to grab a short and try and offset it. So just essentially applying that to individual names as well. 35 minutes. All right, I'm done. Thanks for sticking with me. Fun week of trading. We'll see if Tesla bounce can follow through. We'll see if the... All right, let's recap. Financial sector, do we get a clear new all-time high? Does the NASDAQ futures chart, which is a daily stair-step drop, can it confirm a daily downtrend? Bigger picture, weekly downtrends are most important. That's not going to happen for weeks if it's going to play out. So we don't have to worry about that right away. We're essentially watching what's the retracement size on this bounce. And right now, the retracement size on the S&P 500 is much better. It's 382, though. It needs more. And the NASDAQ, much lower than 382. So can the NASDAQ recover in any meaningful, bulls want 50% plus bounce retracement. If it's going to be convincing, we'll be watching daily EMA 12 resistance as a hurdle. But those are the most important things for me this coming week. And again, bigger picture, I was the last 6 months just always looking for long swings on weekly consolidation. And now I'm just, I'm not giving back any of my gains from 2024 or January 2025. I'm going to be a bit more selective with my swing trades. And I'm perfectly fine sitting cash a good bit, getting that 4+% and day trading in the meantime. I hope you're well, do good things. Thanks for watching. Likes and shares are great. Love you.
First planting of the season, we got onion slips. They delivered a little bit too early, but it's going to be warm enough to stick them in the ground. Cover them up if it gets too cold.